Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the last 3 times. Yash Maheshwari, and with me in the studio as always is Amit Ranjan. It's a Thursday morning and another green opening for the markets. We have scaled 22,500 on Nifty, so essentially we are back at record high levels. This is the second straight session where we have hit a record high. In fact, out of the last 4 sessions, 3 sessions Nifty has hit at hit a record high, and the peak now comes for Nifty at 22,523 mark, and for the Sensex it comes in at 74,245 mark. The broader markets now, they are also seeing some bit of a pullback, but is it a dead cat sort of a bounce? We'll see later as the session goes by, but this morning they are trading in the positive, and tomorrow the markets are shut on account of Mahashivratri. Amit, plenty of reasons for us to be perked up this Thursday morning.
Yes, there is, and the cues from the global are positive in the West, slightly negative in the East. After the Fed chair announcement that there will be broad and material changes likely in the times to come, and scaling back of plans to make banks hold more capital has given a positive effect on the markets in the West. If I just look at the Dow Jones, it closed in the positive at 0.2%. S&P closed in the positive at 0.51%. Nasdaq in the positive at 0.58%. Nvidia was still in the positive at 3.18%. It continues to rise. Even in Europe, it was up 2.66%. Apple, though, is still in the red, closed at minus 0.59%. Coming to the European markets, the Stock 600 closed in the positive at 0.39%. Hang Seng today, after being in the positive at 2.17% yesterday morning, is down in the negative at minus 6.3%. This probably would be on account of the US panel approval of the National Security Bill, which is likely to give some strain on imports. Especially from China. Nikkei was also in the red this morning at minus 0.58%.
All right, and Indian markets, they are back at record high levels. In fact, we have been scaling record highs pretty much on a daily basis since the last couple of weeks. Nifty has reclaimed actually climbed 22,500 for the very first time. We are, although currently hovering below it, we are seeing some bit of a pullback at higher levels. But considering the kind of unilateral rally that we have seen in play out since late February, in fact, if you look at the last 5-6 sessions, Nifty has rallied almost 640 points. So some bit of a profit taking, I mean, that is warranted, right? But we are seeing some bit of a pullback in the broader markets. Remember, the small cap index and the mid cap index, they have taken a beating in the recent past, and the small cap index is now currently down about 7.58% from its record high levels, but we are seeing about a 0.4% move this morning, and these numbers are as of 9:30 a.m. The mid cap index, which is also down about 2% from its peak, is also seeing a bit of a pullback. It's up 0.2%, making move towards 49,000 mark, and volatility that has seen a decline in India VIX. Remember, we were used to seeing India VIX at 15-16, but now we are back knocking at 14 sort of levels. So overall the setup looks positive, but to get further cues and what to expect from Nifty going forward, let's also bring on board Avni Bhatt, Senior Vice President at JM Financial. Good to see you, Avni, after a long time, And yesterday we saw a very strong 250 point move in the last couple of hours of trading, and this was, by the way, after a couple of sessions where we saw this doji formation, which indicates indecisiveness. Perhaps this strong up move that we saw in the last couple of hours, that indicates that the ball is right now in the courts of the bull. But the index, Nifty I'm talking about here, has been making lower lows all through the week. How does that fit in your analysis?
Good morning, Suyash, and good morning, Amit, and hearty congratulations, first of all, for watching Nifty at a new all-time high once again. So this has been happening since, I think, December onwards. We are watching new highs on Nifty. So, yes, some profit booking, even a running horse needs to take some rest for, or a water break, you can say, And that's what was happening in last couple of days. But if you look at the options data, 20,200 put writing positions were not shattered, as in not budged at all. And there was a very strong support coming in from the put writers at 20,200 level. So although we saw some profit booking from higher levels, it did take rest. Nifty did come down, but yesterday it made a low somewhere around 22,230, and then again the bulls were in charge, and we saw the up move in the last hour of the trade. So this clearly shows the intrinsic strength that the index is having. And also there are a lot of sectors that are supporting Nifty, although on a rotational basis. So yesterday banking took the lead, and now today again it's the IT pack moved up a little in the last hour of the trade yesterday, and today it's the metals. So there are a lot of sectors that are supporting Nifty. And if Bank Nifty also supports Nifty, then I think Nifty is going to move even faster. So overall, the trend is positive for the month of March. I think we should be heading towards 23,000. And on the downside, a very strong support at 22,000. A trading support comes in at 20,200. So the view remains positive. I think one should buy on all the declines that we see in the market, all the rest periods that are seeing on Nifty and Bank Nifty.
All right. I mean, certainly Nifty is doing fairly well, and a lot of these sectors are also, participating in the up move. But Nifty Bank, Avni, we have, long debated on the show whether it's ready to take that leadership role, But the index, as we know, is notorious for shooting blanks, and that has been the case in the last few months. But we are back at 48,000. What's your sense of things now?
So see, now 4 months is a very long time for any major index, an elephant to stay quiet. So I think now Bank Nifty has to catch up with the kind of rally that Nifty has seen. And banking stocks also, private banking space has started looking up, and PSUs have already performed, and they are still continuing to perform well. So I think banking index also, it should very soon touch all-time highs of around 48,600. The view is very positive on the banking index from here on. I think it should lead the entire market going ahead. And 48,300 is one stopover point where we may see some kind of consolidation coming in again. The support on the downside is at 47,700 and 47,300. So 47,300 remains to be a very crucial support for the month. A trading support level after yesterday's move comes in at 47,700. So we are heading towards around 48,600, the all-time high, and maybe higher also. But for the time being, if there is any dip somewhere around 47,700, one should use it as a buying opportunity for the higher targets.
Good morning, Avni. Now, there is a sector which investors don't really look towards when we mostly talk about multi-baggers, and that is the sector of spirits and alcohol and breweries. There is one company I would like to drive your attention towards, and that's Piccadilly Agro, the company behind the Indri single malt brand, and also Tilaknagar Industries, the company behind Napoleon Brandy in India. Piccadilly Agro has given gains of 711% in the last 1 year, 200% in the last 6 months. In for some correction right now, it's in the negative in the last 5 days at 2.2%, down
Amit,
almost 1% today even.
Voice.
Is the rally past its peak, or is there still some steam left in it, or for those who hold on to it, is it time to cash out? And which are the other stocks in the sector would you advise investors to get into?
So I think Piccadilly, if you talk about it, the kind of move that we have seen, yes, as you said, it's a very silent player. And after touching all-time highs, I think it is consolidating a bit. So the stock should come down to somewhere around 325. That will again be a very good entry level for an upside. The breakout comes in at around 383 levels. So above 383, again, sky is the limit. And we may see levels of around 430 on the stock. So 325, wait for that level to enter into the stock. view remains positive. If you're already holding the stock, keep holding, because we will be seeing levels of around 430 sooner or later. And if you get 325 levels, I think again you can add some more positions, or if you bought at higher levels, you can average it at around that level. And the other stocks from this current sector, I think I like UBL. UBL looks pretty good. United Breweries also, I'll give you the levels, just a sec. Yeah, so the stock has corrected quite a bit from around 1900 levels, and now on the downside, it is taking the support of 200-day moving average and showing some strength in last couple of days. So this stock also, I think once 1738 level is crossed, it will shoot up and see a good move up to around 1857. So this is one stock where one can keep an eye on.
All right, and another stock we wanted to pick your brains on was Tata Chemicals. I mean, phenomenal movement you have seen in the last 5 sessions. The stock is up 33%. Yesterday we saw 13% move. Today, this morning, it's up 7%. Day before, I think on Tuesday, it was up about 6% as well. And a couple of interesting developments. Of course, Fitch has revised the outlook. And there are also talks that Tata Sons, which is the holding company of Tata Chemicals, is also going to list on the bourses soon. The date at which is by which RBI requires it to list is September 2025. So Tata Sons listing could be in the offing, and that could bode well for Tata Chemicals. And we are clearly seeing very strong volumes, very strong upside. How is it looking on the price charts, Avni?
I mean, the stock had consolidated for a very, very long period, and now today, yesterday when I was looking at the stock on closing basis, I was looking out for a breakout level of 1215, which will be which is a monthly and a quarterly breakout. And I think today the stock has opened above that level, so it has given that breakout. It should sustain above this. We are targeting the levels of around 1330 on the stock. Not immediately, maybe a couple of months going ahead, but not too long also. So it's going to be a medium term bet. I think in next 3 to 4 months, we should be watching levels of around 1330. And since it has given a monthly and a quarterly breakout above 1215 level, if at all there is any retracement, any dip up to that level, 1215 level, you can enter into the stock. Although it has moved so much, there is nothing to worry about it. There's still a lot of room on the upside.
All right, that's the view coming in on Tata Chemicals. And Avni, before we let you go, what's on your radar for the short term?
Yeah, so for the short term, I think for this coming week, we should be seeing a good move in IT. IT should pick up again. I like Persistent in this sector, and Persistent we can buy in the area of 8350 to 8360, and keeping a stop loss of 8025. And on the upside, targets would be 8800 and 8900 going ahead. The best pick that I like for the coming week is the entire Adani group. But out of the entire Adani group, I think Adani Enterprises looks very good on the charts as well as on the derivative parameters. We have seen a lot of addition happening at 3300 call, with IV's implied volatility at that particular strike increasing, which means that there is no writing happening at 3300 call, but it's the speculative buying that is happening. So I think Adani Enterprise, we can enter in the area of around 3230. Targets would be 3460. And on the downside, you can keep a stop loss of 3120. The other counter is GAIL, Gas Authority of India. So Gas Authority of India made a new all-time high, and then it corrected, retraced back to exactly the breakout level. And yesterday it moved up again from the 186 breakout which had happened earlier. So that retracement is done. It is ready to move up again and make a new all-time high. So we can enter into this stock in the area of 190, somewhere around 190, keeping a stop loss of 184 and a target of 200 and 205 on immediate basis. And the best, again, out of the entire oil and pack sector, I think ONGC still looks good. We've seen a lot of correction in the stock, but it is ready to move up again. So ONGC would be a buy around 280 levels. Targets for this month, for the March series, would be 297 and 305. And we can keep a stop loss of 272. So risk reward in the stock is pretty good. And excuse me, one non-FNO stock that we can look at is Bank of India. Again, banking sector looks good, and most of these smaller banks are pretty well placed to give an up move of around 10 to 12% from current levels. So as a trading bet, we can create a position in Bank of India around 145 levels for a target of 155 and keeping a stop loss of 140. So again, the risk reward is pretty good, almost 1:2 in this case also. So these are the 5 picks I think we can look at for the coming week.
All right, Bank of India, GAIL, Adani Enterprises could be the short-term bets. Could bet on it for for the upcoming week. That's the view coming in from our expert Avni Bhatt. Thank you, ma'am, for joining us here on News9. Always a pleasure speaking with you. But with that, let's slip into a short break. On the other side, independent market expert Amrish Balega joins us.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
You were the chosen one to direct Mr. Bachchan for his first endorsement, for his first appearance on the small screen.
It was a life-changing moment.
Have you been a rebel with a cause?
There was a sense of responsibility, there was a sense of frustration.
Are you worried about cancel culture?
You tell a story with a fierce psychosis, you're gonna spoil it anyway.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
The football is mother of all games.
It is a team sport.
The leadership attitude is taking the ownership.
It's always a big responsibility to take decisions and the right decisions.
I always question the stereotypical.
And that's why you are in that position.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Take here on News9, and the markets, they have moved towards their day's low. Nifty, is seen facing resistance around that 22,500 mark. Currently, we are at 22,460 odd levels, and this is as of 10 a.m. this morning. we are down about 0.05%, and that is for Nifty. Sensex is also trading with a cut of 0.1%. You know, it's just holding above the 74,000 mark. The mid cap and the small cap space, so far, I mean, they are recovering. They are seeing that pullback after that, you know, the crash that we have seen play out in the last couple of weeks. But you know, I mean, it's yet to be seen if it's a dead cat sort of a bounce, because they have corrected by about 8%. I'm talking about small caps here. The mid caps also have corrected by about 2.5% from their peaks. So, you know, we have to be cautious about the levels and the kind of pullback that we are seeing in the broader markets. But volatility, that continues to decline, and India VIX is down about 0.3%, and this is as of 10 a.m. this morning. We are now back knocking at 14 sort of levels after, you know, spending many weeks at that 15-16 zone. But with that, let's also bring on board Mr. Ambrish Balega. Thank you for joining us here on News9, Mr. Balega. And it's especially great to have you, you know, at a time when the market is at record, because you, sir, have been a voice of caution and reason. Now, Nifty is around that 22,500 mark. We are essentially there. What's the valuation discomfort here, sir?
No, see, the valuation, I mean, the view does not change in a month or two unless there's something major which has changed. So, I mean, if you're talking about the last couple of months, things continue to be the same, but then liquidity and the sentiment is decently high, and because of which we see that whatever corrections are there are bought into, and we see a spirited bounce back. So, from a short-term view, one needs to do a course correction. In fact, we were expecting a decent correction. That didn't happen. It happened to a certain extent, but then after that, we saw extremely good bounce back. So, one needs to change the view in the short term. So, from a momentum angle, I think we can see 22,600, 700 for the Nifty. Whereas I think it's a very good support technically at about 21,700 to 21,900 band. I think that's a very good support. Only if we break that, then should we change the short-term view. Otherwise, for the time being, I think the view can be bullish up to levels of about 22,600, 700. But if you're talking from a fundamental valuation perspective, I think the discomfort is only getting higher. So I think one needs to keep that at the back of mind. And whenever you're playing for short-term, please keep at least the stop losses. I mean, have an extremely strong discipline as far as the stop losses are concerned.
All right. And what are you making of, you know, this correction that we are seeing in the broader markets? You know, essentially the small cap index is down about 8% from its recent peak. And I mean, the correction really began after SEBI, you know, recently flagged to AMFI, the mutual fund regulator, about this froth that is building up in the broader markets. And I mean, the kind of correction that we have seen, even though we are seeing a bit of a bounce back, and we have spoken about it multiple times, that valuations currently seem concerning. But are we in that bubble sort of a territory for the small caps and the mid caps?
See, we've been in the bubble territory for a while, if you're talking about the small cap and the mid caps. But then when money is chasing these stocks, then the bubble can even become bigger. And that's what normally happens. I mean, before it bursts, it can become bigger than what it is right now. And clearly, I think there is caution across. I mean, even the regulators are bothered about the sort of valuations which these stocks are getting. I mean, so many stocks have become multi-baggers in a very short while. When we talk of multi-baggers, we normally talk of multi-baggers over a period of time, over a couple of years. Now, here we see multi-baggers in a couple of months. So I think that is very, very concerning. But then, like I said, as long as the money is chasing these stocks, they can move up more. The bubble can become bigger. But then I think one needs to, I mean, like have your personal targets as to where, I mean, you should exit, in the sense, I mean, where your greed should stop. So I think that's a choice of, I mean, every person who's investing. So I would say that just keep this at the back of the mind, that we are in a bubble zone as far as this segment is concerned. So if you've made good profits, take it off the table and enjoy those profits.
All right, take off your profits off the tables. We are in bubble territory as far as the broader markets are concerned. And I think, as you pointed out as well, sir, there is high liquidity in the market, and a lot of, you know, brokers now, they offer the MTF margin facility, and there is a lot of leverage. And perhaps, you know, we are, in fact, if we have not already, we are near that tipping point. But, you know, banks, they are doing well, and it's the private banks this time, especially this cohort of large private banks, ICICI, HDFC, Axis Bank, to name a few. They are seeing big moves. Mr. Baliga, what's the driver here? Valuation comfort for them, or something has changed on a fundamental level?
No, fundamental level, nothing much has changed, but I think, the way the PSU banks have moved up, especially in the last 18 months. If you go back about 4 or 5 years, PSU banks were not going anywhere. There are a lot of issues, and we had an extremely good rally in the private sector banks. But then if you see the last 18 months, it was the catch-up time. It was a rediscovery for the PSU banks, and we have seen quite a few PSU banks becoming multi-baggers. And the private sector banks were more or less where they were. We saw correction a few of them, like, for example, HDFC Bank, there was an extremely good correction. Again, there's a reason for that because of the merger. But now, after an extremely good rally in PSU banks, I think it's the private sector banks which are doing a bit of a catch-up. And that's exactly what we're seeing right now.
Good morning, Mr. Baliga. While banks are doing well, there's another sector, non-bank finance corporations, which are not doing so well. RBI has effected intense scrutiny and back-to-back penal action against some of these NBFCs, particularly in segments which are in the unsecured loans business. Now, unsecured loans do not have any collateral in the event of a collapse, therefore they are vulnerable. Bank lending to NBFCs have shot up 16% in the past 12 months to 15 lakh crores from 13 lakh crores. Also, a crucial number, that is personal loans, including credit cards, credit debt, and outstanding amounts in these have surged 28.8% in the past 12 months. Now, has the RBI acted to avert a bigger crisis in the banking system? What is your take on the matter?
Absolutely, because see, if you look at the secured lending and corporate lending, that has not grown as much as what we have seen as far as the personal loans are concerned. And that clearly is a reason for worry for RBI. And I think RBI governor has mentioned this also a couple of times in the past. It's only now that we have started seeing some sort of an action. It started with Paytm, and then we saw for IIFL, now we have seen for JM. I don't know, maybe over the next couple of weeks, you'll have more such notices coming up. And I think that's one of the reasons why there is some amount of pressure on the NBFC space. And I think this will continue for a while, because unless some action is taken now, you really can't afford to have a blowout in this space, because we have seen that happening globally in 2008, and we have seen what's happened to the various economies. So I don't think we can really afford that in India. So I think it's good that RBI is taking some steps right now to at least take some action out here and cool it down to a certain extent.
So while different banks, different NBFCs have different problems, from the list that we have put out on the chart, Bank of Baroda, probably because of its size, has been ridden with internal corporate governance problems. But that has not reflected in their earnings. So do you think the bigger banks are able to absorb these issues more than other NBFC companies that are slightly smaller?
Yeah, absolutely. If your size is decently large, these issues can get absorbed. But then that doesn't absolve them of the regulatory issues which are there. So it's very much possible that they could be pulled up as far as regulatory lapses are concerned, and that could be negative from a stock perspective. So, when it comes to picking up a stock like that, I think one should keep that in the mind.
All right, and it's very interesting, the situation that is playing out. A lot of people are concerned about this regulatory crackdown that RBI has been taking on some of these lenders. You blame RBI if they do go out and pretty much hold these companies accountable, and if they don't enough, you blame them still. But how do you see this, because the issues are so broad and wide? What do you see is the recovery or the thing that RBI could do to stop these lapses in corporate governance?
No, I think RBI should have been much more proactive. But like it's better to be late than never. So at least they have started acting now. I think that's extremely positive. And when you talk about regulator, the regulator does not see from a market perspective as to what their actions will lead to market reaction. I think they need to look from a stability of the economy, stability of the sector. And that's exactly what they're doing. So, I mean, I'm totally with what RBI is doing because I think clearly, I think they are securing the future than the present.
Another company that has been in choppy waters, the stock, that is JSW Steel. Now there is news that they are going in for a joint venture and there are stiff negotiations that are happening between Volkswagen's India operations and JSW. Volkswagen is looking towards India to develop a manufacturing hub, especially in the EV space for the global markets, exports in India in the next 10-15 years. Negotiations are still on. Do you see this? JSW has already been a big partner, 35% in MG Motors, which is a Chinese giant. Now, do you see this joint venture changing the fortunes of the JSW Steel stock, which is basically in choppy waters, last 1 month slightly in the negative, barely positive in the last 5 days or even the last 6 months? So what do you think this is going to change the fortunes of JSW in the long run?
No, difficult to say that right now because they are moving into a completely new territory. I mean, from steel to your automobiles. Now, one needs to see as to whether they are going to be, decently profitable in this venture or not. So I think it's a bit early. So I think I would possibly try and wait and watch at least for the next 3 to 4 quarters as to what happens with MG, and post that I'll take a view. As of now, I would possibly stay on the sidelines.
Do you think JSW is spreading themselves too thin? They are going into motors after steel, automobiles after steel. They are going into paints. So do you think they are expanding in too many varied sectors all at once?
And too quickly.
And too quickly, yes, of course.
Yeah, I mean, that's what I'm afraid of. I mean, if you're spreading yourself a bit thin across various sectors, but then, I mean, there are so many other groups which have actually managed that. I mean, although you can't compare them with the Reliance Group, but Reliance Group has managed that extremely well. So you can't really write off this idea, but then I think it's time to wait and watch instead of jumping in.
All right, that's the view on JSW. Mr. Balega, always a pleasure speaking with you. Great insights from you as always, sir. Thank you for joining us here on News9.
Thank you.
Well, let's also look at how the markets are doing because, the last time we had paid attention to them, they were correcting, but we are back in the green. Nifty is up 0.1%, still facing resistance around that 22,500 mark. And remember, in the days leading up to the rally that we have seen play out, in the last few sessions, we had been projecting the levels outward, and 22,500 was where we had pointed out the extension zone from the previous record highs was hinting at a resistance zone of 22,500, and we are struggling a little bit over there. But the kind of move that we have seen in the last last Friday as well as yesterday, and the strong recovery, almost a unilateral recovery with banks participating, I think Nifty maybe has, the large cap especially, still has some legs to go from here. And the banks, apart from the banks, which by the way are near that 48,000 levels, it's still about 1.5% shy of its respective record high, and the index could potentially take it out in the near future. But the IT stocks, they also saw a very sharp recovery from their day's low yesterday. They were one of the worst hit sectors, but they ended with gains of about 0.1%. And as Mr. Balega also pointed out, we are seeing some sectoral rotation from time to time. A lot of these sectors, first it was a pharma pack, then auto, then IT, and now banks, that are coming forth and taking the leadership role and driving the markets higher. But overall the sentiment remains positive, but there are multiple reasons to be cautious. We have seen lower lows in the last 3 sessions. We have seen doji formation, which indicates indecisiveness in the markets. And the broader markets, the situation is still concerning over there. We are in a correctionary phase in the broader markets, the small cap and the mid cap space especially. Some bit of a bounce back. The small cap index is up 0.9%. The mid cap index is up 0.5%. They are charging upward. They are seeing some bit of a pullback after that 2-week sort of correction. But if it's a dead cat bounce, we will know that as the session goes by. But the situation is concerning over there. Even SEBI has come out and spoken about froth building up in the broader markets, and there are not too many instances in the past where the regulator would talk about would flag some caution for the broader markets or the markets in general. But that's the case now, and perhaps maybe we should take some cues from SEBI and reposition ourselves as far as some of these the broader stocks are concerned, because they have in fact turned multi-bagger, and the earnings, they have not really caught up. So you are really banking on the potential for them to grow further from here on rather than what they already have to show in terms of earnings. But with that, it's a wrap on this edition of First Take. Thank you for watching.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me.
When you come into a stadium, this is the highest level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
The winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9, plus subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight, almost deliberately.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience.
Start with the end in mind. You need to know where you